Hi, everyone. This is Adam Smetzer at Sky Vision Wealth. I am coming to you on a Saturday. Today is the 24th of January, 2026, and I'm in the office today just picking up a few things. And I was going through some charts and looking at trend, and I thought, I don't really have anything planned, but I thought I would just um, provide a market update and send it out. And people who, are into this stuff, may appreciate kind of an update on, what I'm seeing here, at least through the first month of the year as we're kind of approaching the end of January. So, without further ado, I didn't have anything planned. I don't have any notes written down or an outline. So set your expectations accordingly. But nonetheless, let's kind of dive in and then see what we have. So I'm going to share my screen with you. And great. So this is a chart of the S&P 500, okay, using the SPY ETF as a metric of that. And I would note a few things. We have kind of been in this chop um, really for the last several months, right? So somewhere around mid-October, we kind of came up to this level, and we've kind of, we go a little bit above us, but then we pull back, and it's been choppy. We go down, we kind of go up, we go down, and we're just kind of chopping, although it is sort of tightening as we go. We do like to see that. Okay, what I mean by that is we've got a bigger wave down and then kind of a smaller wave down, and these are getting progressively smaller. So that is generally a positive sign, but we really need to see, is this thing going to come out of this range? Is it going to resolve higher or lower? And nobody knows the answer to that. But one of the things that I think, that I think about, particularly in our trend strategy, where we're trying to assess momentum and use some rules and use some technical indicators, one of the things that I will tell you is different about the market we're in and different than the market we were, even though the market isn't really falling, it's just chopping, is, a few things that I'll just kind of share with you. So when we came out of this very ugly drop in the S&P that kind of happened from, February-ish, end of February, all the way down through mid-April of 25, we start to resume this uptrend. You can see that we get above the 10-day, the 20-day, the 50-day, the 200-day, and this is an uptrend. This is what an uptrend looks like. You should have your 10-day above your 20-day. Your 20-day should be above your 50-day, and all those should be above your 200-day, and they're all upward sloping to the right. I also like to see in an uptrend where the 20-day tends to act like support. Okay, meaning you can have some little tests of that. You're not going to be above the 20-day every single day. The market's not going to go up every day. But by and large, when you're in a very strong uptrend, I like to see a market that when we do get a close below the 20-day, that tends to get bought, right? People kind of buy the dip, so to speak. You don't get multiple closes below there, right? We're making progress. And in that kind of environment, regardless of what your feelings are, you are in an uptrend. And so, if you are a momentum-based investor, this is the point in time where the wind is at your back. This is the point in time where you can make gains in your account. This is the point in time where you can get away with, things that you cannot get away with in other environments, right? Because the trend is so strong. But um, if you notice, when we get here and we kind of get through the 50-day for the first time, we've had several closes here below the 50. But if we call this kind of this whole group, one trip below the 50, we also had a second trip below and closed here, and a third trip below and closed here. This was Tuesday. So markets were closed on Martin Luther King Day for Monday. So this was Tuesday, kind of an ugly down day. And, positively, the market, went up following day and has kind of put in a couple of small up days since then. So that is what you want to see. You want to see, when we undercut, you want to see it reclaim. And so that's positive. But what I would point out is, to me, this is a different market than the one we were in, right? If you kind of just look at this objectively and say, look, back here, um, we never went below the 50-day, right? You tested it a couple times, but even here, you went below it, but you actually close above it. I don't think we had a close below the 50 until if I can get my cursor on it. It looks like 11:17, even though I can't quite get there. Yeah, 11:17. Okay, and once we got back above it over here, this was around the 1st of May. So, I mean, we had the 1st of May all the way through November 17th, where we had no closes below the 50-day. Okay, now we are in a market that is closed below the 50-day several times in a much shorter period of time. Okay, so to me, um, this is a market, understandably, that is just chopping after it's just kind of digesting this big move. It's not a catastrophe. I mean, we're darn near, highs. And so that looks fine. But the character of it has started to change. Every day as we kind of come in now, we're kind of close enough where we're flirting with, is it gonna be below here? And, how is this going to resolve? Are we going to resolve higher? Are we going to resolve lower? And we're just going to have to see. But the market has stalled a little bit, okay? But it might be kind of coiling here, and we'll see if it does just, kind of digesting so it can eventually push higher, but time will tell. Um, and so, again, that's not the same as like, this is different than this, but it's certainly not this either, okay? It's not like we're in a downtrend, right? So this is what a downtrend looks like when you break and you just kind of keep going and your averages sort of curl over. Um, that's not the market we're in. So what I would be looking for is obviously if we resolve higher, that's common sense. Like, we're going to know exactly what that looks like. If we start to go lower, I think that the levels that I'm watching is one, do we go back below the 50-day and start having multiple closes below the 50? Okay. And then beyond that, see how we've been making higher lows here, right? So as this thing's been moving up, we got a little bit of digestion. Okay. But this low is higher than this low, right? We're kind of even as we move through this digestion, it's like we're trying to push up and to the right. So the thing that would start to get my attention is if we go under the 50, we have some closes below there, and then you kind of want to watch these levels, right? If we break below 671, all of a sudden it kind of looks like we might break this higher low sequence. And then if we give up 650, okay, now this chart is not going to look like it's up and to the right anymore. We're going to be below these moving averages, and it's going to look like, price has started to roll over. Now, am I saying that's going to happen? No, I'm just saying that you got to kind of think about and be prepared for either example. And again, we either go higher or we don't. But I think these are the levels you want to pay attention to see if this trend is still in place or not. So hopefully that makes some sense. And the way I like to think about this is just, again, it depends on what type of investor you are. If you are a buy and hold investor and you make some reallocations and rebalances from time to time, this isn't probably all that important to what you do in your strategy. It might be informative as to what the market's doing, but probably not that informative to the actions in your portfolio. But if you are a trend follower and you are trying to actively manage your risk with technicals, this is very important to recognize when you are in a different environment. You have to have situational awareness. Okay. And what I mean by situational awareness is just simply that this, to me, is different than the market we were in, just like both of those are different than this. Okay. So an analogy would be, hey, um, in Columbus today, it's like 10 degrees outside. It is really damn cold. Okay. I drove, from my house into the office and I wore a coat and I had a hat and I had gloves in my car and, all those pieces and parts. Like I'm not going to be wearing flip-flops and shorts today. Right. Similarly, if it was 90 degrees outside I wouldn't be wearing a big coat and a hat. Okay. I'm probably not going swimming outside today, right? You get my point. So what I'm what I'm saying is that what some people do in their portfolio is say, well, I like or I identify with or I believe that, right? And so what they end up doing is saying, I like wearing shorts and flip-flops. So I'm going to wear shorts and flip-flops all the time, regardless of the weather. Okay. And then they wonder why eventually there's a time period that comes along and they get completely rinsed out. Okay. And I'm not picking on shorts and flip flops. If you have somebody who says, I like wearing a winter coat, I'm going to wear a winter coat all the time. Same thing, different environment, doesn't work. Okay. And so, what we look for when we're assessing trend is trying to not predict what the market is going to do. It is trying to stay aligned with and in tune with what the market is doing. Okay. Because again, when you are in a market like this, you have a very strong wind at your back. This is the point in time where you can make really good gains in your account. And these periods of time, I can't prove it to you. Okay. But they will keep coming, just like these periods of time will keep coming. And just like these periods of time will keep coming. Right. So if you are a trend and momentum investor, you want to be dialing it up when the market is confirming, okay, that we are in an uptrend. All right, but you need to look for these potential change in characters and have some rules and try to assess what is appropriate given the conditions, right? So in this environment, right, you may not have to be as conservative as you might be in this environment, but you certainly don't want to be as aggressive as you should be in this environment, right? And so again, each their own, but that's how I think about it. Um, So next, I thought I'd kind of point out a few things. So if you look at um, the S&P, let's look at the Nasdaq again. Again, very, very similar. Big move. The Nasdaq has been leading for years, and it's kind of been again mostly sideways. And you can kind of see why when you look at sort of these big tech companies that have sort of led the rally. They're really heavily weighted in these indices, and if you kind of look at some of these charts, you can kind of see why. So let's just look at real quick. Let's look at Nvidia. So Nvidia. It's just been chopping, right? And so it kind of had this breakout from the 150 area in about June of last year, end of June, and it kind of made this run up. And you can see it breaks the 20-day and about 2 months later. And if you kind of look at that versus where it is now, it's kind of, it's gone up, it's gone down, but it just really isn't making, any progress, right? So this thing's had a monster move over the last few years. Okay. But when you talk about a market that's been stagnating at the indice level over the last few months, and then you look at one of the biggest weightings in that indice and see it's been doing the same thing, it's not all that surprising. Let's kind of look through some of these other big Mag 7, if you will. So if you look at Apple, Apple has kind of rolled over, right? Apple is, it made new highs and then it's just proceeded to fall. It's got a declining 10-day, a declining 20-day. It's below the 50. I mean, this is not, that's not really what you want to see. Amazon is interesting. It has just been chopping. It really just hasn't been doing anything. Let me go back and look at the weekly here. Again, it's not going down. It's not going up. It's just sideways. Um, the best of the Mag 7 stocks from my eyes, at least on the chart here, continues to be Google. You can see it had a nice kind of breakout of this 200 level last year, and it basically has followed, surfed the 20-day and the 10-day basically all the way up to a little bit of recent digestion here, and it looks like it might try to push out. We've got earnings on Google coming up in 11 days. So that's something to be aware of. We are sort of in the thick of earnings season. And over the next few weeks, we're going to be getting a lot of reports. So that always can have a big impact too, up or down. All right, let's see. Who else do we have to look at? Meta. Let's look at Facebook. So Meta, you can see this chart, it doesn't look very good, right? We've got, I mean, this isn't just sideways. I mean, it's been down. It's lost the 50-day. You got a 50-day that's sloped downward. It's below the 200-day. Now, just here in the last few days, I will note this has had a couple of very nice up days with a little higher than average volume just in these last couple of days, and they report next week. So maybe that gives them an opportunity to say something to try to bring this back up the right side and see if it can't make some more progress. But you can see as we're kind of going through these charts, okay, why the indices would be stagnating when you have some of these big companies that are going through some small corrections and digestion. So who else do we have? We have Tesla. Tesla made a big move out of this area and then has just kind of been chopping. And so again, it's kind of coiled around all these moving averages and just kind of coalesced around the same line. They report this coming week as well. Who else we got? Microsoft is a really interesting one. Look, I mean, Microsoft has, it kind of peaked a little over 550 back in, what was this, August? Yeah, end of July. And yeah, I mean, we're down $90 from there, right? It's lost the 200-day. We have a downward sloping 50-day. And, again, I think that that makes some sense when you see why the indices might be stalling. Netflix, to me, this is a really good example of a couple of things here. Sometimes you hear people talk about buying stocks of companies that like you use every day and stuff like that. And I'm for that. I think it's helpful to understand what you're investing in. But at the same time, if you're just buying stuff and you don't have any rules, this is a really good example of what can happen to you because Netflix was actually one of the leaders coming out of the digestion back in April, had a really, really big move. Okay. But then when it broke, I broke the 50-day and it just, it's just been a sick chart ever since. I mean, this thing's just been going down, 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 down. And again, not everybody is a trend follower. Not everybody's a momentum investor. So people might look at this for their strategy and treat this different. But one of the things I've struggled with for people who just say, well, Netflix is something I use every day and, it's down, so I'm just going to buy it. And, but they don't really have any rules. They don't really know that's kind of stuff bothers me because some of this stuff, like if you've just been buying this, like all the way down, you're losing a lot of money. I would just, the way I like to think about this is if you like Netflix, okay, and the thing is falling, the way I prefer to think about it is let it quit falling. Okay, let the market confirm that your view is correct. Because if it is going to go from 86 back to a new high of 134, it's got a lot of ground to cover. Okay, but you don't know if 86 is going to be 40. And I'm not picking on Netflix. This happens in like everything. Okay. But again, that's sort of the way I think about it, right? Is I've made all these mistakes over time. And so one of the things I like to see in a company like this where, it's in a downtrend is rather than just buying the downtrend, let's see it get support and actually start going up first, right? Let's get some sign that the selling has been exhausted. Because when you're looking at a chart like this, what you're really looking at is supply and demand for the stock. That's it. You're not looking at an opinion or what. This is where the stock traded. Okay. So until supply, okay, until that fails to, until demand exceeds the supply for sale, right? You're not going to see a change here. This is just going down. So again, and that could change tomorrow, but wait and let the market confirm before you do that. So let's see. I think we looked at Tesla, but that gives you some kind of a sense on like the Mag 7. Now, a lot of these names, other than Google, which looks pretty good, the rest of them have kind of stagnated, rolled over, and there's been a lot of this stuff. And I mentioned that earnings is coming up. For me personally, in our strategies where we use individual securities, again, each your own, do your own due diligence, you do your own process. But one of the things that I am trying to be very cognizant of is I try not to hold something into earnings, certainly not a big position unless I've already got a pretty good profit cushion on it. It's not to say I won't ever buy anything in front of earnings. My position's probably going to be very, very small. And I kind of want it to work right away. And so those are just lower probability things. So a lot of times as I'm coming into earnings season, especially in a market like the one we're in, where the general market has been just chop, 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 there's not a lot of clean setups. And we're coming into earnings season. For me personally, the individual stock holdings are a little light because it's just like, hey, I would just rather not take a bunch of risk in front of an earnings event. Would rather take bigger risks when I see price action that looks more like this, not so much like this. And so again, that doesn't mean that you can't do anything, but again, I'm trying to just apply situational awareness to the fact that this market is a little bit different than this one until we can resolve higher and really get going, right? So let me give you an example of what I mean on earnings. You can have some stocks that really resolve higher, but I think GE this week is a really good example. GE is not a very volatile stock, and they're in a very good sector, right? And they've been having a really nice run. If we look at the weekly chart, I mean, this just looked pretty good. Okay. Now, earnings the other day, they reported what was this? Yeah, 2 days ago. Um, and they reported 18% sales growth and 19% earnings growth. And the stock the stock went down 7% on the earnings report. Okay. And so this is kind of what I mean. If you are establishing a new position, in something, you really need to be cognizant of, um, where you are, because if you're just buying stuff, right in front of earnings, you're eventually going to get hit, by a hurricane. And again, you'll get some of them, quote unquote, right, but you're really just flipping a coin. And so I try to avoid these higher risk events. And you can see GE actually had follow through selling the next day. Not a big deal. Wasn't a big down day. But again, that is something to just keep in mind. We saw this with Intel. Intel, actually, after just a huge period of underperformance, started to get going again. And right, they were coming into earnings and the stock was just going, vertical. Okay. And so this is looking pretty good. This thing's finally starting to make some progress, starting to really show some strength. And then on earnings, this thing dropped 17% in a day. Right. So you need to be cognizant of earnings dates. My preference is, again, if you're taking a position in front of earnings, I tend to try to not do that. But if I am, I'm trying to look for something to push pretty much right away, or I might just take it off entirely. If I can get enough profit cushion, I'll typically hold the position. But if I can't get enough profit cushion, I'll at least like reduce it if I don't just get rid of it entirely, right? So let's see. I'll show you some others that were interesting this week. We had Arista Networks, again, kind of pop up on this day after it's been in a downtrend. You can see it kind of broke its 50-day, and it's just been down here. It got some support at the 200. It's just been chopping around. They are, again, kind of in this data center space, and they had a really nice run, but have really been struggling. And then, it kind of had a nice day here, but closed at the low. I thought this was interesting day. There was some news out about, their products going to be used in some data centers and increased demand for their products that may have not been known. And, the next day we really didn't get follow through. So, again, we're just kind of in that environment where something goes up, but it doesn't follow through. Like, let's look at, I think it's Rambus. Yeah, so Rambus tried to break out. Again, they're in this semiconductor space as well. And they had a really nice, strong breakout on good news. If we just back up a couple days, you can see what this looked like in real time. And I remember looking at this and thinking to myself, man, okay, this really strong day, and you really want to see this thing just kind of follow through or not give this back, right? And you can see the next day we kind of get not a big down day given what had just happened, but this is that looks okay. But then the very next day, I mean, we kind of close this whole gap. We just kind of give it back. So, and again, if we've got the entire market, right, that is kind of in chop mode, and we see these stocks that are trying to break out, but then kind of stall and give back, like that's kind of reinforcing that we are in sort of this up-down environment and not in quite of the environment we are here. Now, there's some exceptions to that. There's a lot of strength in memory stocks. So this is Micron, for example. You can see a lot of strength there. SanDisk, Western Digital, these are all memory companies, and you can see they've all just been kind of surfing the 10-day higher. One of the names that's popped up on my screen, I don't have any positions in this. This is a very small company. You can see Century Aluminum had a really nice breakout back here, really strong, and has just rode the 10-day higher. And I like to look for this relative strength to look for potential areas because, again, if you have a general market that's been below its 50-day and it's testing its 50-day every day, but you have a stock that while that's been happening, hasn't even cracked its 10-day, that's something that you want to pay attention to. There's oftentimes something good perhaps happening in the space. Now, this might not be a clean setup for an entry, but it's something that you kind of want to keep an eye on is where is the relative strength? Where is the money flowing? Because if you can't make money in the leaders, you're going to have a tough time making money in anything, I think. So again, these are just some examples I'm just kind of going through off the top of my head. But again, I would also be remiss to mention the metals have been extremely strong. This is gold to start the year, and this is silver, and this silver has just gone vertical. I mean, this just has gone absolute bonkers to the upside. One of the better breakouts in the individual stocks I've seen this year is this FTAI Aviation had a really nice breakout right here. And that's extremely powerful, right? And so this is an example of a breakout that has worked, just like we looked at some that kind of haven't worked or have failed. And so they're out there, but they're not, again, they're not as, say, proliferating as much as they were in this environment. So it's great if you've gotten a hold of a couple, but the fact of the matter is, if you're taking a lot of these, probably most of them have sort of reversed. And so it's been kind of tricky, kind of choppy, and I think that that's where we are until we find out whether this resolves up, whether this resolves down, and we don't need to know because the market is just going to let us know, and then we can adjust. So I hope that is helpful, and I'm going to kind of wrap it up there. I have thought about doing these updates again. I probably could have been a little more organized for this one to run through some things, but let me know if you did make it this far. If you like the video, certainly feel welcome. You can subscribe to the YouTube channel. But if these are things that you'd like me to do on a more regular basis, maybe let me know. That's something I'm considering. And if there's certain things that you'd like to see as it relates to, an update that's perhaps on a weekly basis for something like this that you'd like me to cover, let me know that too. And I'd be happy to do that. So with that, I really appreciate you watching. Like and subscribe if in fact you did like it. And stay warm out there. I think everyone's got a lot of weather coming at them this evening. And If you have any questions or want to talk to me, feel welcome to reach out. Phone number is 614-412-8737. Email is asmetzer@skyvisionwealth.com. Thanks so much. Take care now.